I have a 20-year career as a trader, been in professional prop environments and run prop now on my own. I've seen seven-figure traders, eight-figure traders. I know even the best need help. Sometimes you're off. You're going through something. You need a risk manager. You're not thinking clearly. You're not doing well. You might have that screw it moment. Even the best need these things. They need to be pushed. Swing trades that don't work when vol is high. Let's just say there's a market where, you get a bullish setup or whatnot and you're long from here. Well, how do markets behave in really volatile situations? There's a lot of, you think you're absolutely golden and it absolutely rips back. And then before you even know what happened, it's back up here. Imagine this is like a 30-minute bar chart here, right? You're in a trade for hours and it comes back and gets you. And the next thing you know, a couple hours later, it's headed towards where you thought it would go. That can lead to chasing. That can lead to all kinds of other issues. But the point is that when volatility is really high, it's hard to find a safe place for stops. It looks like a major low is put in. Markets come roaring back on a news release. And then, as we saw during the really, really high vol, a month ago, 2 months ago, you get huge candles like that on a tariff headline or whatever. And something like this. So it's really tough to find a safe place for a stop for swings. What can you do? You could really, really, really trade with huge stops. I don't think that's really feasible. Killing the risk reward that much with such a huge wide stop, I don't think so. You could try to be nimble and try to just accept that stop outs are going to be a part of it. And so as I often trade with my short-term trading and with it longer-term trading, it's all about the art of the reentry. You're going to get stopped. Markets are going to go hunt liquidity. They're going to do that. So finding reentries becomes a really important part. And a lot of swing traders don't do that. What about scalping techniques that stop working, short-term tactics that stop working when volatility goes lower? What about that? Well, I think it's the quality that we're looking for is clean momentum. And that oftentimes is what we get short-term. Think about it. High vol, I just got through talking about. We wouldn't call this clean momentum, would we, on this 30-minute chart? But what about on just for extreme argument, what about a 30-second chart? A 30-second chart, if we were to zoom into, let's just say this last little up leg, it's got ridiculously clean momentum, right? The bars are barely overlapping. They're really going once you got that momentum shift. So if markets were to trade like this on any time frame, it doesn't matter what time frame, but my point here is that both can be true at the same time sometimes. You literally can't lose, right? If markets just did this, we would see, oh, look, here's a momentum shift from downward moving candles to upward moving candles. This is what people try to recreate with things like Renko and stuff. They think they'll be able to design the market to do this. Well, the market just doesn't do this all the time, right? No matter how much you dial in the settings. This is why I'm not a fan of Renko, because it's a false thing that people are trying to make markets do. If markets were to trade this way, you get long here, and then, however you manage the trade, you simply can't lose because of the clean momentum. Well, what happens when volatility goes down? What does that 30-second chart start to look like? Oftentimes, it starts to look like something more like this. Oh, look, downward momentum, upward. Here's that same pattern, right? Here's that momentum shift right here. Oh, it's actually breaking down. Yep, it's breaking down. No. Okay, now it's breaking up. Now we're breaking this high and we're going. No, right? That's what low vol tends to give you, a lot of false shifts in momentum. Quite frankly, we've seen my trading suffer from chasing a lot of false shifts in momentum. One thing that's required, and this is why I love the general theme of what I think Credelli does with this show. I've said this before. He tries to key traders in every morning before the main trader comes on, like myself on Tuesdays. He tries to help people key in on what's the environment, what are the catalysts, and then he gets some opinions on directional bias from some people and things like that. Understanding environment. Context is king. Context matters. I see too many people who, I'm not going to throw any dirt here with any names, but let's just say go to some of these fake props, right? There are a lot of what we call fake props out there, right? They're just bucket shops. They're, that type thing. Not that it's tremendously all bad, but it is what it is. I see too many people who just have this mindset that they're not ready, they're not good enough, they don't have it yet, and they just go to those places. And what I have seen, because of a lot of the ridiculous rules and parameters and hoops that they have to jump through, they're more focused on that than just getting better at trading. And so what happens is they actually just prolong their learning curve to getting really good at trading. So I encourage people to trade somewhere where your focus can be on trading well. Your focus can be on getting better. Your focus can be on building this career that you're trying to do, not trying to focus on P&L. If you don't think you're ready to perform, why would you go somewhere where the entire focus is on performance, getting a payout, and you need an attorney to figure out the rules in order to do so? Think about it. I say if you just have some funds and you're just trading your own account, you might do well for a while. You probably won't, but you might do well. I have a 20-year career as a trader, and I've been in professional prop environments and run prop now on my own. I've seen 7-figure traders, 8-figure traders. I've sat next to them. I've talked to them at happy hour. I have seen all their fills for years on end. I know even the best need help, myself is included in this. Sometimes you're off. You're going through something. You need a risk manager. You're not thinking clearly. You're not doing well. You might have that screw it moment. Sometimes you need help with technology. Sometimes you need a boost in confidence, a slap on the wrist. Even the best need these things. They need to be pushed. They need to be developed. Look at any performance activity in the world. Do you see guys, other than Roger Federer for a period of time, do you see them without a team, not just a coach, a team? How many times can I say this to people? You're probably 98% or more not going to make a career out of just trading on your own. And this reason only is why real prop is the only way to go. Oh, a bunch of people have asked today the difference between volume profile and market profile. They both can look the same. Volume profile typically looks more granular. For example, it might look like this, right? Whereas market profile is going to look more simple, right? It's going to look like this. You don't have all these little short-term notches and things like that. LVNs, low volume nodes. Market profile is built of literally, let's take this and rotate it 90 degrees. So it's going to be on its back like this, okay? How does it form? 30-minute bar falls down. You remember the game Tetris? 30-minute bar falls down to the bottom. So it lands here. The next 30-minute bar falls down here, but then it's going to kind of break and fall as low as it can go. That's this Tetris game, okay? The next 30-minute bar is, let's say, here. It's going to fall all the way down, and let's just say it goes here, here. The next 30-minute bar is this, and so it's a little bit right here, and then here, and then here. So look, now let's rotate this back up on its side. Well, guess what? We've got this profile that's forming, right? It's literally 30-minute bars that stack up, right? And they fall as far as they can against the edge of the profile. Volume is, on the other hand, it's literally how much volume is traded at this price, how much volume is traded at this price, all prices. This represents 100 contracts. This represents 200 contracts, right? 150 contracts, 300 contracts. And it just shows you on the y-axis how much volume, like this, right? See how it's more granular? There's a lot more going on. That's all they are. One tells you where price has spent time. One tells you where price has built literal volume, both on the y-axis. That's all they are.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.